Welcome back. So as we've been telling you, the cues across Asia are a little mixed. The implied open, however, has been telling us that we'll start strong, almost 80 points higher. So in sync with some of the markets like Hang Seng. Look at that, almost 90 points higher now. What about individual stocks? Lots of companies to look at, lots of earnings to go over. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Sudarshan, Tata Motors, it's all about these trade issues that are going on. But anyway, how's the company shaped up in Q4?
I'm going with mild green for Tata Motors due to two main reasons. First, Q4 earnings were largely ahead of expectations and outlook remains supportive. Now, talking about the earnings were ahead of estimates, but outlook remains cautious. And the guidance, if you talk about for Tata Motors, company will give guidance on June 9, that is Investor Day. And for JLR, the guidance will be given on June 16, that is Investor Day for JLR. Now, coming to the headline numbers for Tata Motors, both EBITDA and margin were flat if you compare YY, but it's higher against our estimates. For JLR 2, EBITDA margin was flat at 15.3%, but almost 100 basis points higher against our estimate. And for JLR, EBIT margin of FY25, company has reported 8.5%, which is almost in the line of the guided range that company had given. Now, going forward, what would be in the focus for JLR? First is the tariff increase. For the exports from UK plant, tariff increase is of 300%, that is to 10% from 2.5%. And for exports to US from EU plant, tariff increase would be 1,000%. So that would be in focus. For commercial vehicle, both trucks and buses segments have registered double-digit growth. But in the near term, company cost will increase because company has to transition truck business to AC. Now, for passenger, both SUV and CNG segment continue to do well, but hatches segments remains under pressure. But going forward, company believes that new launches that company is going to take in FY26 will support the growth.
Okay, all right. Thanks a lot for that, Sid. Well, let's hop across to Rima, who's tracking Bharti, Airtel and Bharti Hexacom. Welcome back, Rima. Fit and fine. Go for it. How are the numbers?
So pretty good for both Bharti and Bharti Hexacom. So first for Bharti, remember the numbers are impacted because of a full quarter consolidation of Industars versus only 43 days in the prior quarter. That's Q3. We're looking at the numbers on a quarter-on-quarter basis. So that explains the big improvement seen in the consolidated numbers. So revenues have gone up 6%. EBITDA is up nearly 10% on a sequential basis. The bottom line is a lot of exceptionals. But if you strip that out, analysts say that the numbers are largely steady. The company continues to execute very well on the India mobile front. Revenues have gone up 1.3%. Their margins have expanded further to 59.2%. That's the India mobile EBITDA, 59.2%. ARPUs are steady. That's the average revenue per user at 245. Subscriber addition healthy at 5 million in the current quarter. So all in all, good set of numbers. Africa led to the beat, but Africa numbers were known. India numbers are pretty much in line with expectation. Conference call today at 2:30 p.m. Hexacom has reported a beat. Top line growth 1.7%, margins 53.3%, and the bottom line has been boosted by an exceptional gain of 82 crore rupees. Back to you.
All right, Rima, thank you very much for that. That's Bharti and Bharti Hexacom, and you'll hear from an analyst at 9 o'clock on these as well. Max Financial Services reported numbers. The insurer, Yash, is here with details. Yash, morning.
Well, morning, Prashant. So it's a double positive as far as Max Financial Services is concerned. I'll speak about the first one. Here, the numbers for the quarter have been very, very strong. A beat on all counts, if I may say so. Total AP that has come in at about 3,339 crore rupees versus CNBC TV18 poll of 3,039 crore rupees. Retail APE is bang in line with what CNBC TV18 had estimated. Value of new business, that's where operationally strong performance is coming. A strong beat and a growth of about 8%. Margins, again, on a year-on-year basis, they're up 45 basis points, but again, a very strong beat at 29.02% versus poll of just 26.06%. This is the first positive, and the companies ended the year FY25 on a very strong note, but the month of April has again been very, very strong over a strong base which the company had. So, of course, ending the year on a very strong note, starting the next financial year again on a very strong note.
Okay, all right. So looking good for Max Financial Services. Thanks for that, Yash. Let's get to Upasana now. Siemens and Honeywell Automation, two numbers from the capital goods and industrial space. Past the morning, how are they looking?
Good morning. First up, let me start with Siemens. Now, overall revenue was in line with Nomura estimate with a growth uptick of 3% on a YoY basis. Company's EBITDA margin and net profit, all three missed estimates. Now, it is also important to note that the demerger of the energy business is effective from 25th of March 2025 onwards. Now, coming to the company's overall EBITDA, it stood at 467 crores with a downtick of 27%. Company's EBITDA margin stood at 11% versus 15.3%, downtick of 436 basis points. Company's PAT stood at 408 crore with a downtick of 37%. Now, company's PAT declined mainly due to under absorption of fixed cost and higher cost of material in the digital industries business. It is also important to note that PAT was also impacted by an extraordinary gain of 192 crore from the sale of property in Q2 SY24 and demerger expenses of 63 crore in the current quarter. Now, next up is Honeywell Automation. After the last few quarters, company missing consensus estimate. After several quarters, company has reported revenue, gross margin and EBITDA above estimates. Now, revenue saw an uptick of 17% on a YoY basis, 3% higher than the Bloomberg estimates. EBITDA stood at 159 crore, down 6%. EBITDA margin saw a downtick of 357 basis points, which was largely in line with the estimates, and company's net profit missed estimates due to higher effective tax. The number as 140 crore in terms of PAT with a downtick of 6%, 9% lower than the Bloomberg estimates.
Going with red, right, on Honeywell as well.
Green, I expect, and Siemens, I'm going with red.
Siemens is red, all right. Got the head of us, and thanks very much. So mixed numbers from the industrial stocks. Let's talk about defense names. Tall expectations here because the stocks have been going through the roof. Ria is joining in. Ria, Garden Reach Shipbuilders, at least optically those numbers were looking good. Tell us more.
Well, yes, good morning. Garden Reach Shipbuilders has reported quite a good set of numbers in this quarter. The revenue has gone up around 62% on a year-on-year basis. Even the EBITDA and net profit have jumped up by 144% and 119% respectively over the previous year. EBITDA margins have also seen an expansion of around 454 basis points, coming in at 13.5% in this quarter versus about 8.9% in Q4 of last year. For the full year FY25 as well, we've seen good growth on all fronts. The net profit margin has also been above the guidance of the company of over 8%. The order book details haven't been disclosed yet, but as per the Q3 earnings call, the company had said that the order book is expected to come down to around 22,000 odd crores at the end of FY25 as execution is picking up, and the order book at the end of Q3 stood at around 23,877 crores. Some key things to watch out for going ahead will be the management's comments on the order book and execution, and an update on their key project, which is the delivery of the 8 ASW shallow water crafts, all 8 of which are to be delivered by the end of October 2026. And remember, the first one was delivered just last week to the Indian Navy. So overall, good set of numbers for GRSE, and expecting the stock to open in the green today.
Okay, all right. Thanks very much for that, Ria. Now, the MSCI changes, and let's put the spotlight on some of those stocks where those revisions have happened. Vivek, take it away.
Well, that's right. So overnight or very, very early morning today, MSCI went ahead and announced the changes. This is as far as the May 2025 index review is concerned. The index that we track very closely is the MSCI Global Standard Index, where there are 2 additions that have been made, and there will be a significant amount of impact, especially in terms of passive fund flow. When will the adjustments take place? The adjustments will take place on 30th May 2025. 2 additions, no deletions. So when you're talking about the 2 additions, Coromandel International makes its way into the standard index. IIFL Capital expects close to $227 million of inflows into this particular name. The other stock is FSN e-commerce, or Nykaa, or more popularly as it is known as. Over $180 million of inflows is what IIFL Capital estimates. Along with that, there will be some stocks from the small cap and mid cap to in focus. MSCI small cap index has seen 11 additions and 22 deletions. So overall, Coromandel and Nykaa make their way into the MSCI Global Standard Index.
Okay, all right, Vivek. Thanks a lot for that. Well, let's hop across to Manisha. She's here to tell us about the crude sensitives because they'll be reacting to a bit of a pop that we've seen in crude oil prices. Morning, Manisha.
Morning, and thank you for that, Nigel. Well, yes, a fourth straight day of gain coming in for the crude oil prices. It's trading at a one-month highs right now, while the U.S. and China coming together for at least a temporary truce for the 90 days is something that clearly has been supportive. But apart from that, the markets also are looking at improved outlook on global trade flows. The fresh sanction threats against Iran also seem to be doing the trick that we have seen support come in for the crude oil prices. There are buying calls actually coming in for various banks and brokerages globally as well. The only thing to watch out for would be Saudi Arabia pushing for increase in production for the month of May and June. And it also says that they will penalize members producing more than the quota. So that is something that could perhaps cap the gains in prices. But apart from that, the last couple of weeks have been good for crude, and this one continues in the positive side as well.
Okay, all right, got it. Thanks for that, Manisha. Indeed, watching out for crude quite carefully now that it's back above 66. Quick recap of all the stocks to watch today. The ones that have positive news flow or earnings around them are Tata Motors, Bharti Airtel, Bharti Hexacom, Max Financial, Honeywell Automation, Garden Reach Shipbuilders, Coromandel International and Nykaa, green on the back of the MSCI edition. The only stock with negative news flow on our list today is actually Siemens because of numbers. The crude sensitives obviously in the watch zone, that is OMC's paint stocks as well as aviation stocks. ONGC and Oil India could be reacting positively because of the surge in oil prices. Let's take a break on that note, come back on the other side, and we'll have the management of Sirma joining in to talk about their fourth quarter performance and outlook ahead.